Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic morning so far. Happy Friday, everybody. I'm looking forward to our final trading day of the week. Looking forward to recapping some of our trades and talking about what we'll do, what our game plan is for this weekend and also going into next week. So looking forward to getting into that. Before we get started, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So it's been a great week, hasn't it? Right? I had a lot of emails from most of you, either emails and or comments on social media, just telling me about how the COT report did wonders this week. Some of you I've responded back to, some of you I haven't. It is my plan to respond to everybody this morning after the webinar if I haven't gotten back to you yet. So, and if you have other questions, feel free to shoot me more emails or more messages if you have questions, but feel free also to use the chat box function here in the webinar to ask your questions. But it's been a great week, hasn't it? In fact, let me pull up my live account real quick. Let me see where I'm at with these trades because it's been pretty awesome. Wow. So let's actually go to the COT report, and I'm gonna I think at this point, guys, you can close your trades. It's pretty close to the end of the day. I mean, you can close now or you can wait till later. But really pat yourself on the back if you held these trades the whole week. I know for some of you, this might have been the first time ever that you've held a trade for a whole week, right? And that's pretty amazing. So if you did hold your trades that long, pat yourself on the back because that's something that probably 90% of most retail traders wouldn't be able to do or wouldn't do, wouldn't be willing to do. So that's awesome. So I'm looking at my account right now. I'm up like 7% on this week, which is amazing. So let me close. I'm actually going to close my trades one by one here. I just want to let me put this in. So I actually have my euro dollar short, and that euro dollar trade, I know that wasn't one of the top 6. It's just one of the trades I mentioned at the beginning of the week. That one's up 74 pips right now, which is just amazing. I'm going to close that one. And then I've got NZD CAD. That one's up 72 pips right now. So let me put that in here. That's up 72. I'm going to go ahead. I'm going to close that one out as well. Like I said, I'm just going to close my trades. I thought it'd be fun to close them together in the webinar. 72 NZD Frank I still have open. I'm up 95 pips on that one. Let me close that one out. 95 pips right there. And then NZD Yen, that one's up, oh my gosh, 277 pips. That's amazing. I'm going to close that one out. And I've got USD Franc. That one's still open. That one declined just a little bit. It's only up 38 pips at the moment. I'm going to close that one out. And then USD Yen. That one made 265 pips. 265. And I'm going to close that one out right now. And then obviously our USD CAD closed out the first day of the week and it hit its stop, and that one closed for minus 95, but everything else was a profit. I still have my Mexican peso trade actually open right now. I know we didn't take that one together. We talked about why that's a good trade. The short on the peso is a great idea right now. So yeah, I'm up almost 1% on that trade too, but I'm going to continue to hold that. That one I'm going to hold over several weeks, actually, I think. So Cool. So that's awesome. 652 pips on the week. That's amazing. 652 pips is really quite a phenomenal week from these top 6 trades. And there was even a loser in there, which is awesome. Most of these profits were comprised of these 2 trades, as you guys know, the NZD yen long and the USD yen long were kind of what comprised most of those profits. Over 500 pips just came from those 2 trades. But these other trades came in stout as well. NZD CAD, NZD franc specifically, those ones were still pretty good. So one thing I thought about that I wanted to talk about this morning is I wanted to highlight one thing, because we've talked about how this has been a great week and how not every week's going to be like this, right? Not every single week you're going to make this kind of money. In fact, I want you guys to go back with me real quick and find the last week in this journal where we made a similar type of profit. So obviously last week I didn't even make money. In fact, I gave back the market some money. It was not good. And this is if you had not used a trailing stop. Had you used a trailing stop, you would have only lost 34 pips on the week with a trailing stop. But yeah, without one, it would have been pretty disastrous. I don't know about disastrous, but not good, right? The week before that was a loser, minus 193. And then the week before that was kind of amazing. Oops, let me go back over here with 687. So the last week that was comparable to this week was 3 weeks ago. Okay. So I just want to make sure it's clear. I know it's probably pretty clear, but I do want to make sure it's really clear that not every week does this. Okay. This is just a great week and enjoy it. Be grateful for it, but it doesn't happen every single week, right? So the last time I made an update to this version of the strategy, where you go off of leveraged funds and you take the top 6 trades, was back in October. So I've traded this consistently the same way since then. The only time that I didn't trade this was during that, if you guys remember, we had that cyber attack on the CFTC, not the CFTC. It was on a reporting company to the CFTC. And so they had delayed data. And because of that delayed data, they weren't able to send out the COT report accurately. Until now, obviously, we've got accurate COT reports coming in. So it was like a month or a month and a half where the COT report you couldn't even trade the COT report because of that. Okay. But otherwise, all of this is accurate. So there's been, I think I said earlier on Wednesday that these trades have made, well, I guess I've been trading this, the 6,000 pips that you see here, the net profit, that comes from 30 weeks of trading, okay? So if you think about it, if you have 6,056 pips and you divide that by 30 weeks, that means you're making just over 200 pips a week, okay, with the strategy. If you wanted to smooth it out into a linear graph, that's what your growth rate would look like, is about plus 200 pips a week, okay, with the COT report. So the fact that this week was super awesome and it gave us 652 weeks, that's kind of like making over 3 weeks of profits in just 1 week. So I do want to make that super, super duper clear, that you're not gonna get that the traditional way every single week. Now, some of you were able to do some really unique things. Like I saw a couple of emails from a few of you, and earlier this week as well. A lot of you guys got really smart and you found other ways to use this information. So you didn't just take the simple, take the trade on Sunday or Monday and then hold it all week method, which there's nothing wrong with that method. It's my method and it's great. It's worked. But some of you got really smart and you started including your smart money concepts and your break of structures and things like that to find better entries. And what that did for a lot of you, in fact, I'm thinking of one person in particular, is they were able to get some very substantial returns because the stop loss was tight and the take profit was, big, and the lot size was also pretty big as well. And so you can squeeze out over 10% returns on singular trades, if you trade it that way. Now, I'm not saying that you will every time. In fact, I had another guy, different person this week, traded the dollar yen. He just bought up the dollar yen all week long, and just waited for dips on the dollar yen. And that's great. That's great if you can find those dips and tighten that stop loss up. You're going to have a lot more losses doing that, but when you win, you're just going to absolutely crush it. Your percent gains are going to be outstanding, absolutely outstanding with that type of trading. So that's what I'm saying, is there's other ways to do this. But if you feel like you just want to trade it the traditional way I've done it and the way I've kind of created it, then that's perfectly fine. I mean, that's how I've always done it. One of the things for me, and I've kind of had to identify the way that I trade in particular. I really hate losing. I really do. I also feel like, for me, I'm perfectly okay with my style to be a swing trader. I know for some people, I've got clients who are just scalp traders by nature. They just can't handle the idea of holding a trade a whole day or a whole week. And so that's why I'm trying to give you different ways of doing this. But for me, I like the hands-off way of trading. I like I'm a methodical trader. Like, when I actually did a trader profile one time, and I'm considered to be what's called a methodical trader. Aggressive methodical is my nature. And so one of the natures of a methodical trader is to have that sit back mentality, is to a little bit over an analysis, I'd say, and just kind of approach things a little bit more calmly. And so I don't feel this need to jump in and capture every single move, make $10,000 on a 10 pip move. Like, that's not really my thing. For me, I'm perfectly happy. Like, I made a 7% return this week just holding these trades. Over 7% I made this week just sitting on these trades. And I didn't have to burn myself out, looking for trades at night, although I still looked for other trade opportunities. As you guys know, I didn't really burn myself out, which is kind of cool. All right, Dave says, is there any one source for the COT, or can it be sourced from an alternate location if this site went down for an extended period? So that's a great question. Like, are you talking about the CFTC website, this one right here? Are you talking about if these guys went down? As far as I know, so the CFTC governs the Commodity Futures and Trading Commission, right? And so these exchanges have to report, these ones right here, they have to report to the CFTC. And as far as I know, no one else reports their trading, like the trades that they're taking to the CFTC, or to anybody else. So I feel like if you wanted to get information that wasn't from the COT report, you'd have to go and get it from another source completely. And I don't know what source that would be, Dave. I will tell you this, the CFTC has been reporting these particular COT reports since 2005. So this has been around for almost 2 decades. So I have a large amount of confidence in their continued reporting. Obviously, if they stopped reporting, we'd have an issue. One of the things that I'm working on right now, you may have seen me working on this, is on par with the COT report. I'm also looking at the client sentiment, so shift in sentiment daily. So you guys know about the MyFX book sentiment index, right? I've shown this to you many times. So this is similar to the COT report, right? And not every webinar, but maybe once a week, maybe once every other week, we'll take a look at this, right? So this is kind of nice because this tells you how many positions the retail traders, so people like you and me, are buying the euro or selling the euro, or if they're buying the pound, selling the pound. This is really useful. And one other thing too about sentiment that might be more powerful than the COT report is this is in real time. So the COT report is updated once a week. This is updated often like every 20 minutes, right? And so you're getting live information about the whereabouts of the retail trader, which is really nice to know. And generally speaking, you don't want to trade with the retail trader. So if the retail trader is buying, you want to be selling. If the retail trader is selling, you want to be buying. Now, that's not always the case. Sometimes they're going to get it right. In fact, one of the things that we have to be careful of, for example, you look at the Aussie Kiwi right now. 97% are buyers and 3% are sellers. When you get to that level of extreme, okay, where pretty much everybody's on the same side, eventually those traders are going to have to flip directions. They're going to have to, give up their positions and go the other way. So you want to be careful not to just simply buy and sell just because one group is buying and the other one's selling. It's the same thing with the COT report. We talked about this week and last week and the week before that the euro buy is a terrible buy right now. You don't want to be buying euros. Why is that? Because the banks have the biggest position they've ever had in the last 2 to 3 years on the euro right now. And the banks are at some point going to have to flip those positions and offload them to the retail trader. So if they're going to be offloading their position to the retail trader, and whoever else will buy it, that's going to cause the market to knee jerk the other way. So you do want to follow the banks, but while they're adding to a position, but when they start to get over leveraged into a position and they become too heavy, you want to stand clear, and that's when you don't want to follow the banks. And the same thing happens with sentiment. So if we're taught with sentiment that you want to do the opposite of what retail traders are doing. So like, for example, with the Aussie Kiwi, if most people are buying, you want to be selling. But the problem is when you get to such an extreme, you run the risk of the market flipping. So Dave, I know this is a long answer, but I'm looking for alternate ways to basically trade the COT report by looking at things like this as well. We could create our own indicator actually by using this information. So for example, here's some ideas that I have right now, just to innovate a little bit more. So for example, rather than trading the Aussie Kiwi because it's at such an extreme, if we find out that 24 hours ago, let's say, for example, the pound yen, 82% short, 18% long. Naturally, you'd want to go long because most people are short. You want to go against what most people are doing. But if we found out that maybe last night they were 70% short and now they're 82% long, we're seeing a massive shift in their positions, right? Where they're increasing to the short side. So maybe we should get even more long when they're increasing short. Now, let's say, for example, the pound yen last night on the flip side, where it was 90% short, and now they've decreased to 82%. Well, that means they're shifting the other way, and we wouldn't want to follow this anymore because they're leaving their short positions behind and transferring long. So you don't want to follow the retail trader as they're doing that, right? So that's the concept that I'm trying to monitor. And I think we can find some really stellar trades. I think there's a way we can probably analyze this every day, and maybe a couple times a day. And depending on the shift in their positions and the total positions that they have, this could actually be a really good trade. So anyway, that's just another way I'm trying to diversify the portfolio with a similar concept though, so that if, for example, because you like, I see what you're saying, you don't want to be so reliant on this, right? Like, what if, I mean, just an example, like, what if the CFTC shut down? I'm not saying it is. I have no reason to believe it's going to shut down, but what if it did, right? And you put all your eggs into the COT report, right? That could be devastating towards your trading success in future, right? I've actually, on a side note as well, I've had a lot of people ask me, why don't we make a robot, a trading robot that can trade on the CFTC COT data? And I think that's a great idea. The only problem I have with that is they're constantly making changes to the COT report. So for example, this is a special announcement right here that they made changes to how the E-minis are reported. And if your strategy was to trade E-minis and you didn't change this in how your robot views the COT data, your robot might have blown up, right? So they're constantly making updates. And so that's why it's kind of nice to have your own eyes to come in here and see if anything has changed, right? Okay. But yeah, that's a great question. Any other questions about that? These are great. I love these questions. Let me go back over here. In fact, I have a client, he doesn't come to the webinars as often, but he actually worked on this spreadsheet with me. He created this update button where I could hit update and it would just give me a new entry every week. The problem is ever since they made a couple of changes to the COT report, the data is a little bit corrupted now because they've made some changes with how things are reported. So I just need to go in there with him and have him fix a few things so that I don't even need to manually put this in anymore, because you used to be able to just hit that update button and it would just work, which was pretty cool. All right, so let's see. Some other things I want to show you guys as we prepare for next week. So and actually, let me finish just a few thoughts here, and then I'm going to go to bar chart and show you a couple of things, unless you guys have some other questions. But like I said, and I know I've talked about this, but this was a great week. Let's be grateful. That's awesome. It's not going to happen every week. So be prepared and be willing. Like, let's say next Friday comes along. I'm not saying it will. I have no idea. I'd never know when it's going to be a good week or a bad week. I've even had weeks where it's back-to-back good weeks. So it's totally possible that next week is just as good as last week. It's totally possible. I've seen it happen many times. So I have no idea if next week's going to be a good week or a bad week. We're just going to keep doing what we do. So that shouldn't discourage you from trading next week. If that is something that you're worried about, just continue to trade it like normal and you'll be fine. And if you have that commitment to trade it like normal, you'll do just fine, because I know how it is when you're I know I've been through these emotions. So when you have a really great week, like some of you probably traded this live and it was awesome. Some of you maybe just traded it in a demo account, and that's great too. That gives you a lot of confidence. There's nothing wrong with trading in a demo account and making a truckload of money in a demo account. That's going to encourage you to trade well going forward. Same thing if you lose money in the demo account, that's going to hurt and it's going to sting. And so it's going to encourage you to make better choices going forward. So one of the things that happens when you have a great week is there's this tempting feeling to go really hard the next week. Okay, that worked out really well with the demo account. Now I'm going to go mortgage my house and put in $100,000 in a trading account and see what happens, right? I do not want you to do that. I do not recommend that at all. What I recommend is that you risk responsibly, right? You have to risk money to make money. You really do. But just do it within what you feel like is best. So one of the ways you can protect yourself is maybe this week is your week. You're like, you know what? Hey, I'm convinced I see a future with this. Maybe next week is the week I deposit money into a real account. Good for you. Like, go for that. I'm not saying you shouldn't. You have to do that. The whole idea of doing this is to improve and to make money, right? So go with your plan, but do the things that I've told you to do, like use a lot size calculator. You have to use a lot size calculator. Okay. You have to. There's no other way around it. So, which by the way, I think maybe that's something I should talk about is how do you set these up? Maybe it's like, okay, great. I see that it worked. I caught some of this, but maybe I don't know how to set it up exactly how Steve's doing it. Is that a question that some of you have? I wonder if it is, because that's something that's we should probably talk about. But yeah, like I was saying, because let's say, let me give you an example. So let's say next week is a losing week with the strategy. And we have a whole different conversation next week where it's just like, oh, well, we lost this week, but on to next week, right? Is that going to put you in such a bad mood where, or in a mindset where you're like, nah, I'm not motivated to trade next week? If that's the mentality, maybe you shouldn't even be trading the COT report, because it's not going to win every single week. Just trust me right now. You can go back and look at my back test and my forward test. Well, this is a forward test because these are all live trades except for the ones in, let's see, the ones in February are just, I didn't like it to live trade those because of the cyber attack, but they're back tested correctly. So they're as if you had taken the trades normally. So otherwise, everything else is a forward test. So go back and look at this. Ask yourself, okay, yeah, that was a minus 300 pip week. This was a minus 200. There's plus 700 here, plus 600, minus 51. Some good weeks here, some minus weeks here, right? If this looks encouraging to you, like, okay, so for example, here's a 3-week period of losses in January. Minus 20, actually, yeah, no, it starts here. Minus 341, and then a minus 206, and then a minus 150. So seriously ask yourself the question. I know it's easy to answer when you're doing well, but imagine yourself on the third Friday, like we're meeting together. It's the third Friday, and you have lost money for 3 weeks in a row. Could you go to week 4 and grab that right there? Because obviously week 4 is going to cover all your losses. And then week 5, look at that. The next week 4 covers all your losses, and then week 5 just adds to it, right? And the next week is plus 488. And that's the thing that sucks for a lot of people is they see this, they quit on week 2 or they quit on week 3, and then they find out that the group made all this money on week 4, and then on week 5 they made all this money, week 6, and then they're like, oh man, they made money like hand over fist the last 2 weeks. Now I'm going to get back in. So they get back in on week 3, they make a little money, but then the very next week back to a small losing streak, right? See what I'm saying? It's so the only way to trade something like this is if you have a commitment to just keep doing it, right? And it's the same thing. Like I deal with these struggles with, I'm not the most fit person. I deal with these types of struggles all the time when I'm trying to, lose weight or get myself physically fit. So there's like, for me, what's worked for me, and I'm no like gym instructor, but what's worked for me is I have to do things that I'm willing to do. So I've tried it before. I think everybody's tried it before. I've tried things like, okay, today I'm never going to eat carbohydrates ever again. And I'm just going to eat salads for 3 meals a day. Like, it's just not sustainable. We're just human, right? So what I have to do is I have to do things like, okay, I can commit to 10,000 steps. A lot of times after these webinars, I go on my walks, I'm like, I can at least do that. Okay, what else can I do? Okay, this week I'm not going to drink any sodas. Like, that's something I can do, but I'm still going to have pizza tonight. You know what I mean? Like, just stuff that you can commit to. So if you can commit to this, then you'll be just fine. But if you don't think, if this is too radical for you to hold a trade throughout the week, then maybe it's not maybe it's not the right thing, and that's fine. You just have to commit to what you feel like you could commit to, right? All right, guys. So great stuff. All right, so let's jump over here. So as we look into next week, obviously you'll get a new report and it'll be on the journal there. Let me make sure you guys have this if you want to bookmark this. I'm going to put this in the chat box. And then over here, this is Barchartcom, right? And this is a great resource as well. Let me make sure you guys have this link if you guys want it. So this afternoon, in about 4.5 hours, we're going to get a new COT report. And this is going to update. And what am I going to be looking for when I'm looking at this? So if I come down to currencies, oh, first of all, I got to switch to non-commercial. Okay. I got to switch to the non-commercial side. 1 second. Come on, let me in. Okay, come here. Let me get this set up. 1 second, guys. There we go. Okay. All right. Okay, so I'm always looking at non-commercial when I'm looking at COT data, right? So so you can look at lots of different things. You know, there's grains, energies, livestock, metals, currencies, financials, indexes. So if you wanted to look at the E-minis, the NASDAQ, all of that's here, which is super awesome. So you can see what they've been buying and seeing what they've been selling, right? Okay, so when you're looking at currencies, because that's what we mostly trade, the big highlight over the last 3 weeks is the euro, right? So the euro has been at a 52-week high. So, and again, normally you want to do what the banks are doing, right? So like with the euro, maybe back in early April, maybe like if you go back to, you can actually click on this just by currencies, and then you can go to next dates. Like if you look at the euro even in March, you can see that the euro was expanding to the upside. So you had banks that were buying up the euro. Where is it? Right here. Yeah. So generally they were adding positions starting in, they got to an apex low in the middle of March, and then they started adding to the euro essentially. They added here, they added here. They had a week where they pulled back a little bit here on April 4th. But then, and then it just continues to add to the euro. So you get 163, that's a huge jump in April. And then you get to 164. And then about April 25th, they hit a 52-week high. Yeah, they hit a 52-week high, and they've been at a 52-week high for the last 3 weeks in a row. So when that happens, the banks have a very large position, and then they need to start to offload that position to somebody else because they made all these profits on the euro because they were obviously buying this up, and they need to give it to somebody else. So what's the euro done for the last 3 weeks in a row? And again, if you pull up the euro dollar and see what's happened, you can pretty much, let's go back the last 3 weeks. Yeah, I guess you can just expand this out. And you can see what's been going on, right? So yeah, starting about, let's see, here, here, and here. Yeah, about here is when they started to offload their position. Maybe even 4 weeks ago, they started offloading their position. It started off really choppy. Like anytime it went up, it just came down. Even when it came down, it went up. And then about 2 weeks ago, it just, starting last week, and then this week, it's just been it's been terrible, right? This thing has just pulled back insane amounts. And what I'm expecting this next week with the COT report is either this could increase again and we'll just be at another 52-week high, at which case you're still looking for sells. But even then, if this number decreases, you're still looking for sells, because that means they're starting to go to the south side, right? So I'm pretty sure that no matter the outcome, you're still looking for sells next week, because even if this number increased, that just tells you that they have a position that they still need to offload to the retail trader. Okay. And I already told you guys I'm doing the same thing with the peso right now. I've been shorting the peso because they're at a 52-week high as far as long positions go. That's been just a personal trade. I didn't post that though. That's just personal. The other trades that I'm looking at though too, in fact, let me pull this up. I think it's this. I put this together. Yeah. Let me pull this over for you guys to look at. So yeah, Euro is definitely looking for shorts, peso looking for shorts. And then the yen has actually been on a little bit of an increase. So if that increases again, I might look for some long positions on the yen. The CAD also had a significant increase this last week. In fact, I even put this by percentages, I think right here. Yeah, here it is. So this last week, I've got this set up by percentages. So the CAD had a significant increase in long, even though they have a net short position, it appears that they're switching directions on the CAD. They're actually starting to buy up CAD. So that's one that we're going to watch. If that increases again next week, that's going to give me even more confirmation to buy Canadian dollars next week. Swiss franc saw a drastic decrease, so that's another one that I'm watching and see if that continues. Kiwi dollar actually had a decrease too, as far as non-commercials go. This is different from leveraged funds, by the way. Just something that they're usually the same, but they're not always the same. So I just want to make sure that that's clear as well. Anyway, so these are just some things I'm watching for next week. And so those are kind of the three on my watch list: CAD, Swiss franc, Euro, and maybe even the Kiwi. I'm just trying to see what they do. But most importantly, and I've said this over and over again, is it's as much as you want to follow their increase and shift in directions, the most important thing that I've noticed, and it's been the most consistent thing that I've observed as I've traded the COT report, is once they hit a 52-week high or a 52-week low in positions, get out of the way. Like absolutely get out of the way. Not just get out of the way, but be ready to capitalize on that, right? Get ready to capitalize, because once they start to get top heavy or bottom heavy one direction or the other, you're gonna have to see those switch the other way. Another thing that I'm watching too, if you go and look at let's go back to financials and look at this information. Yeah, bonds make sense that they're at 52-week lows, and they're probably gonna change soon here. I think it's indexes. Yeah, indices. Here we go. So the NASDAQ has increased in their position since April 18th. And if I recall, that has basically been just on a tear to the upside. And then if you look at, in fact, let's just take a look at the NAS 100, because I'm pretty sure it's just been up for the last several weeks, I believe. Yeah, so last several weeks, since when did this come out? They've been increasing their positions. Well, technically they've been increasing their positions since April 4th here. all the way to now, it's been pretty consistent. So let's see. I just want to see. April 4th was right here. Yeah, that makes sense. They've been increasing. Yeah, ever since they've been increasing their position, this thing has just been going up. That makes sense with the NAS 100. I am being very cautious with my buys though right now on the NAS 100. I've told you guys about this before. There's a lot of supply tucked up in here. This is a supply zone. It makes sense why that's pulling back actually. But anyway, that's just something I'm looking forward to. The only thing though is I'm a little bit hesitant to put in a short just based off of the COT report, because if you look at this, you'll notice even though they're increasing their positions, this seems to be a good place for them to be. So their 52-week high is 38,000 contracts long or net positions long, and negative 25,000 contracts net short. And they're right in the middle, basically. I mean, you would argue that they're closer to the top than the bottom on the NAS 100. But when you look at the summary report, yeah, here it is. Look, they're really not at a 52-week high or 52-week low like the euro is. So an argument could be made that there's more room for them to continue to buy. So as far as the COT report goes, you'd still want to be looking for long positions, just because there's really no other there's really no other reason to believe it would go down, because they're adding to the long side quite aggressively, right? Like they're getting rid of shorts. You can see that right here. They got rid of shorts last week and they added more longs, right? And they've been doing that for the last 6 weeks, like with an endless chain, like without breaks in the chain, pretty consistently, right? The only thing that's interesting to me though is the S&P 500 E-mini is at a net position that is at a 52-week low. So that is interesting. It's possible we see them flip the other way at some point. So that might be something worth looking into if you trade the S&P 500 E-mini. All right. But yeah, I'm mostly going to focus on my currencies next week. And again, my big thing is still the euro, because again, you're at a 52-week high. You can see that right there. And if that maintains to be true, you're going to want to look for shorts. If they decrease, to me, that's still a short opportunity, because that just shows you that they are indeed offloading their position. So I'm almost certain that I'm going to be looking for shorts next week on the euro still. Yeah. Okay. Any other questions about this going into next week? Oh, this is the one thing I wanted, and I'll probably wrap up on this unless you guys have questions. So how do you do this? What should be your expectation? Because I know we have some new folks with us as well. Maybe we have people in the recording as well watching this that are new. So what are we going to do? What should be your expectation? So tomorrow night, I'm going to be posting my top 6 trades to take. They're going to show up here in Telegram. So they'll be right here. I'll show you. This is the Telegram channel. All of you should have access to this. If you don't, let me put the link in the chat box. You need to join this channel, because this is what you're paying for, right? So make sure that you're in this channel. Okay, this is where you're going to get alerted. I try not to bother everybody too much. I've been in some channels. In fact, I'm still members of some channels that just bug you every 5 minutes. So I try to just make really necessary posts. Like I don't post everything about my life on here. So hopefully that's helpful. I just try to, anything that could be useful to you, I typically post here. Like signals, how we're doing with our trades, any updates to trades, that's all going to be here. And then last week on Saturday, I posted these trades right here, the top 6 trades of the week. That's where you got this. You can also just go directly to the journal, right? So that's where you're going to go. Barbara says, do you always trade the 1 hour time frame? That's usually it's the 1 hour and the 15-minute are the two that I like. 1 hour and 15. And then sometimes I might trade a daily time frame. Just depends on like if I'm doing a top-down analysis. But yeah, 1 hour and 15 is kind of my bread and butter. Okay, so you'll get these here, but when you get these, you're gonna have to do something with them. Something I recently started doing just this last week is I included the stop loss for each one. So, when I'm saying, okay, with the USD yen, it's gonna have a 166 pip stop loss. With USD franc, it's gonna have an 84 pip stop, and USD CAD, NZD yen, everything here is gonna have its subsequent stop loss. Okay. I will always post this with, well, I always use a trailing stop in my live account. It helps protect a lot of capital using a trailing stop with this strategy. So I would recommend it. Yeah, I would. That's something I would definitely recommend, is using trailing stop. So, but how do you place these trades? Like once you get these, your job is to go into your own trading platform and execute these trades when the market opens at whatever price you can get. You can wait until Monday to trade these. Some of you may even wait till Tuesday. I would never do that. For me, I would just get these in as soon as the market opens. So you could do it when the market opens on Sunday, or if you wanted to wait until you could wait till Monday and do it there. So, but your job is to go into the trading platform and place these trades. So there's a couple of things. There's a couple of specific responsibilities I'd say you'd have with these. So one is taking this information and putting it in your trading account if that's something you want to do. And again, I'm not trying to say it's like a responsibility. I'm just saying if you're going to trade the strategy the way I trade it, I guess then it's a responsibility. You just have to basically take these top 6 trades and then put in the stop loss for each one. And then the most important thing, honestly, is figuring out your lot size. And that's something I can teach you how to do it, but I cannot tell you what lot size to trade. And everybody can choose what they want to do. So what I do is I always go to my lot size calculator. So I'm just going to search lot size calculator, my FX book. This is the one that I use. If you want this, I'll put this in the chat box. And then I just search the currency pair that I'm trading. So let's say I'm trading the euro dollar. I'm going to put in the euro dollar. Let's say it's a $10,000 account. I'm going to put in 10,000. If I want to risk 1% per trade, I'll put in 1%, and then I'll put in whatever stop loss I'm going to put in. So if that's 10 pips, I'm going to put in 10, but let's say it's 50. So I'll put in 50 and I'll click calculate, and then that's going to tell me what lot size I need to accommodate this much risk with assuming this stop loss, right? So you would just basically come into here, plug in your own information, the currency pair, the stop loss that you literally just got right here, and then you'll figure out what your lot size is going to be. And then you can go ahead and proceed to take the trade in your account once you know what lot size fits your account best, okay? A lot of people can ruin a great trade with their lot size. Okay, that's actually a big deal. Like you can really get yourself into trouble with the wrong lot size. I've had people who, I've been doing this long enough where I've had people who will ruin their trading career just on a single trade because they put an extra 0 or 2 on a lot size. It's kind of a big deal. You have to pay attention to that. Like I had a friend was trading options and accidentally put an extra 0 on an option trade, woke up the next morning and he got an email from a guy named Margin. And Margin called, or I guess got an email with headline saying margin and owed a margin call the very next morning, right? That kind of stuff happens and it's a nightmare, right? So you can double check these types of things. Like as you take trades, I've shown you on MT4, you can hover over your stop loss and it'll tell you if that trade were to hit that stop loss, it'll tell you exactly how much you would lose to the penny. Do that every single time. That'll protect you from really messing up. On the web trader platform on Awanda and forex.com, they'll tell you even before you submit the trade, if you put in this lot size with this stop loss, it'll tell you exactly how much you're risking. Same thing if you have a take profit, it'll tell you how much profit you could afford to make, right? So anyway, just good recommendations, good practices before you get into trades in the future. Okay, so I think that covers that. Let me answer some of these questions. So yeah, I answered the question about the time frame. Kylan says, Steve, will you show whether it's a 15 or 1 hour each is posted in a Telegram, just heads up. Okay, so yeah, so when you're in TradingView and other platforms, it's usually at the top of your chart up here. And you can see right here, it says 1 hour. And what this means is if I'm on a 1 hour time frame, that means every single candlestick is 1 hour of time. That actually took me a long time to figure out, by the way. I didn't understand why it was called 5 minute or 1 minute or a 1 hour. So this is a 5 minute chart. So that means every candlestick represents 5 minutes of time, of trading time. Okay. If I'm on a daily, that means every single candlestick represents 24 hours, right? So, all right, and that's where you can see it. I may not if the screenshot doesn't have it, that part, it also says it right here. So it'll say the ticker that we're trading, whether it's a daily, a 1 hour, 15 minute, and then it also tells you the data that we're getting. So this one's coming from Awanda. Yeah. All right, guys, I think that's pretty much it for my recap of the week. And like I said, it's been a great week. How awesome, right? 652 pips to end the week. Absolutely insane. And let's do it again next week. I'm excited. So look for those signals to come out tomorrow, probably in the evening. And then we'll just go from there. And then you guys can go ahead and take these trades into next week. So have a fantastic weekend, everybody. Thanks for coming, and we'll catch you in the next webinar.